Hi, everybody. This is Jack Milligan with you again from the SPI Group, three companies serving trial lawyers and injury victims across the country. So this is our structured settlements structure rate update. These are updates that we do from time to time based on interest rate changes in the structured settlement marketplace. That seems to be a topic of interest amongst trial lawyers and claimants across the country. So we provide this service. And since Fed Chairman Powell had a meeting and some announcements yesterday, it's a good time to issue our structure rates update. So as expected, the Fed kept their target federal funds range between 5.25% and 5.5%, where it's been since last June. That was the first thing that came out of that meeting. Second, the Fed signaled multiple rate cuts to come later this year. Those are cuts of a quarter point, 25 basis points in their lingo. They're expecting those to start in June. And then third, the Fed said that it would keep trimming its balance sheet, but less quickly than it has been for the past 2 years, which is good news for the markets. You may have noticed that from 2 o'clock Eastern yesterday, the stock markets, the Dow, the NASDAQ, the Russell, all rallied tremendously. Bitcoin rallied, gold rallied, everybody rallied because with the Fed numbers that were released during Powell's speech and the press conference itself supporting the status quo, that's going to keep the bullish theme going in the markets. And that's traditionally what we see in an election year. So let's take a quick look here at where we are at with our 10-year Treasury rates. These are the rates that we have commented on before that we noticed annuity companies seem to key off of. So here's that screen. This goes back for almost a year. And the important points to mention here is that back October 19th last year, we peaked at about 4.99, almost hit 5% on the 10-year. Then we dropped down here almost at the end of the year, December 27th, we dropped to 3.79. And then we've been in a sawtooth pattern up and down ever since. Currently, we're sitting at 4.28. So that's what the 10-year Treasury is telling us. So we've got generally increasing 10-year rates, which have been good for the structure rates. And now I'll show you the actual screen with our structure rate update sheet. And this will be attached at the bottom of this email. You're free to distribute it as you see fit. Share it with whomever you want to. These are the current rates, and by and large, pretty good. We had a favorable rate decrease on March 1st from most companies. And what you're going to see here are rates of return and the various type of structure payments that are in the fours, all the way up to almost 4.75. Where you see the 3% returns up here, that's on lifetime annuities. And as you get up into the older ages, age 30, age 40, a life and 30-year payment stream is going to have a internal rate of return of over 4%. But once you get up into the 50-year-olds and older, we're going to see that internal rate of return drop into the high threes. So all in all, though, looking pretty good and hanging in there. The markets liked it. It looks like we've got several months ahead of us of favorable economic and financial status for our markets, and that should be good for structure rates. Structured settlements, though, however, are just one part of a well thought out, comprehensive settlement plan. Settlement planning is something we promote heavily, and that is putting planning before financial products. We do comprehensive planning for clients, and if that is something that you want to explore for your client or yourself, just give us a call. Till next time, this is Jack Milligan, the SPI Group, and take care, everybody.